If you've seen offers for personal loans from BHG Financial, you might have wondered if they are legit. What are their loans like? Should you use them? That's what we're going to cover in this video. BHG Financial was founded in Florida in 2001. Initially, they just provided loans to medical professionals as they set up their practices, but they have since expanded into small business loans and personal loans. Their personal loans focus mainly on debt consolidation. Their consumer loans are funded by Pinnacle Bank out of Tennessee. Pinnacle bought a 49% stake in BHG Financial a few years ago. So from a corporate standpoint, they are very closely aligned. At least one Pinnacle Bank executive sits on the BHG Financial Board of Directors. BHG Financial offers loans between $20,000 and $250,000. That is both the highest minimum and the highest maximum loan amount of any of the lenders we track. In fact, that maximum loan amount is twice the next highest. Their loan terms range from 3 years up to 10 years. 10 years is a long time to be in debt, but I suppose if you're borrowing $250,000, you would need that kind of time. But they also encourage people to extend smaller loans to 10 years. There are several reasons why you wouldn't want to do that. Check out this graph on their website. It would lead you to believe that you can save a great deal of money going with one of their loans by just extending the term from 4 years to 10 years. What they don't disclose is that by going with a 10-year term on a $50,000 loan, you will be paying more than $45,000 in interest compared to $16,000 for a 4-year term. That is a huge difference. There is another reason you might want to avoid BHG Financial's longer loan terms. Their loans often have what they call lockout periods. That means for a period of the loan, you are not allowed to pay it off early. Some agreements might have a 5-year lockout term on a 7-year loan, or a 3-year lockout on a 5-year term. That means that you can't even take a longer period knowing that you can pay it off early. This is incredibly unusual in the lending world at this point. While they don't call it a prepayment penalty, that's essentially what it is. And frankly, they're the only lender we track that has any kind of policy against repaying a loan early. If you receive an offer, you will want to be very clear in the terms and conditions what to expect. Their APRs range from a low of 11.96% to a high of 27.87%. Those aren't terrible APRs in general, but could be too high given their high loan amounts. You wouldn't want to take a $100,000 loan for even 12% if you can help it. Embedded in that APR are very high closing costs on the loans. Closing costs could come in the form of an application fee, origination fee, or document processing fee. But cumulatively, it could be 15% of the borrowed amount, or even higher. If those fees are unavoidable, they should be represented in the APR. It is also likely that they will encourage you to buy some form of credit insurance that could cover your loan in the event of your death or disability. Buying the insurance should not be required in order to secure the loan. My research across a lot of different lenders suggests that credit insurance is rarely worth it. It is usually overpriced for the risk that they are protecting you against. You would probably be better off buying a specific life or disability policy with an insurance company. Their business model relies on a high-touch relationship with their customers. A loan officer will work directly with you on your application. They will help you gather the necessary documents for a loan. They could require things like pay stubs, tax records, bank statements, social security number, and proof of identity. The application could be completed in a day, but is more likely to take a few days. Funding could come through in as little as 5 days. If you need any assistance on your loan, you will need to call or email them. They do not have an online account maintenance website, so you will need to email them if you even just want to know what your loan balance is. They will send you a Word document that has your payment schedule in it. Every time you want an update, you will need to send another email. Once you get a loan and show that you are reliable in making payments, they will approach you with an offer to refinance. Refinance could lower your interest rate and provide you additional money, but it will reset the term on your loan as well as reset your lockout period. Also, you will pay another set of closing costs. So I can't imagine that it would ever be a good idea to refinance a BHG Financial loan. There are indications that they don't report to the credit bureaus. This is very unusual for loans of this size. If this is true, it is actually a two-edged sword. Their loans and payments will not show up on your credit report. You won't get credit for on-time payments, which would contribute to a strong credit score. On the other hand, if you use their loan to consolidate other debt, paying off those other debts would remove them from your credit history. Your score could go up because the credit scoring agency would not see that your original debt was just swapped with a BHG Financial loan. BHG Financial is likely to be fairly restrictive about who they approve. For debt consolidation, they require a minimum income of $75,000, no prior bankruptcies, and your credit score has to be above 600. But of course, that's the floor. Your financial situation may need to be significantly better than that to be approved, especially if you need a higher loan amount. If you need a little assistance getting approved, they will accept co-applicants on their loan. Of course, a co-applicant will help your application the most if they are in a stronger financial situation than you are. Remember that a co-applicant will be responsible for the loan if you fail to repay it. BHG Financial is one of the few lenders that offer extremely high loan amounts. For large loans, their APRs might be expensive. I think you need to be extremely cautious about the terms and conditions of the loans before you accept one of their offers. I am particularly concerned about the lockout period or prepayment policy. You always want to be able to pay off a loan early. Anything that discourages you from doing that should be accepted only with extreme caution. Whatever you do, you should always shop around before you accept a loan. If you can, you should get 2 or 3 approved offers in hand before you accept a loan. That is the only way to be sure you're getting the lowest APR and the best terms that you can qualify for in your situation. At the Yukon Project, we've tried to make shopping around easy. If you go to our lending marketplace page, you can select your loan purpose, the amount you're looking for, and your credit score. When you apply to any one of the featured lenders, we will check your rate with up to 40 other lenders behind the scenes. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of your approved offers, so you can select the loan that's best for you. If you have any experience with BHG Financial, leave a comment below and tell us about it. Other viewers could benefit from your experience. If you found this information helpful, please like this video and subscribe to our channel. Your support helps us out, and we appreciate it. Thanks for watching.